Welcome to the US Tax Forms Coach YouTube channel. Okay, let's dive right into this explainer and completely demystify the brand new 2025 digital asset tax rules. My promise to you in every single explainer on this channel is this. By the time this lesson ends, you will know exactly what to do next. No confusion, no guessing, no wondering if you filled something out correctly. Just clear, confident, step-by-step guidance from start to finish. That is what we do here every single day. So settle in, have your documents ready, and let us walk through today's lesson together, one step at a time. Listen, if you're feeling a bit of anxiety about reporting your crypto on your 2025 taxes right now, you are absolutely not alone. The IRS just introduced a massive structural shift in how they track digital asset transactions. Whether you're just a casual crypto investor or somebody with hundreds of trades spread across multiple wallets, that fear of making a mistake on your returns is incredibly common this year. I mean, the paperwork has completely changed, the rules have tightened up, and the IRS is honestly paying closer attention than ever before. But hey, here's the really good news. You don't need to stress about it. Like I promised, by the end of this explainer, you will have absolute clarity. We're going to decode these new IRS tax rules together. We'll break down exactly which forms you need, which new codes you absolutely must use, and how to get your numbers safely onto your final tax return. Okay, here's our quick roadmap for today. First, we'll cover the 2025 digital asset rules. Second, defining your digital assets. Third, the documents you need for tracking basis. Fourth, mastering the Form 8949 codes, and finally, connecting it all to Schedule D. Section 1. The 2025 Digital Asset Rules. To really understand what's happening in 2025, we kind of have to look at how things used to be. Pre-2025, if you sold crypto, brokers essentially squeezed those digital trades onto Form 1099-B, which, was originally designed for traditional stocks and bonds. Taxpayers would then report those trades on Form 8949 using Box C for short-term trades and Box F for long-term trades. Well, for 2025, the IRS has completely overhauled this. They introduced a dedicated form, Form 1099-DA, specifically for digital assets. Because of this, the IRS explicitly states that you're now banned from using Box C and Box F for digital assets. No joke, if you try to put your crypto trades in those old boxes, it's going to immediately create a mismatch in the IRS systems. Instead, you must use the newly created boxes G through L. Section 2. Defining your digital assets. Before we start filling out forms, we need to know exactly what the IRS considers a digital asset, so you know right away if you're actually on the hook for this paperwork. The IRS defines a digital asset as any digital representation of value recorded on a cryptographically secure distributed ledger. So what does that mean in plain English? Basically, it means cryptocurrencies like Bitcoin and Ethereum. It means convertible virtual currency. It means NFTs or non-fungible tokens. The IRS treats all of these digital assets as property. This means that the general tax principles applying to property transactions apply directly to your digital assets. Whenever you sell them for cash, trade one crypto for another crypto, or even use crypto to buy goods or services, yep, that's a taxable event that you absolutely must report. Section 3. Documents for tracking basis. To calculate whether you made a profit or a loss, you have to figure out your adjusted cost basis. Let's list the specific documents you'll need to actually track that basis. First, look for Form 1099-DA. Starting in 2025, major U.S. centralized brokers and exchanges are required to send you this form. It acts a lot like a 1099-B does for stocks, showing your proceeds and, in a lot of cases, your cost basis. But what if you don't use a centralized U.S. exchange? Well, you'll need your personal wallet transaction logs and your decentralized exchange, or DEX, settlement statements. Remember, your basis isn't just the initial purchase price of the coin. Your basis is the cost to acquire the digital asset, plus transaction fees, commissions, transfer taxes, and other acquisition costs. You absolutely must track all of this. And I really, really want to emphasize this next point. If you use self-custody wallets like MetaMask or foreign exchanges that don't issue a Form 1099-DA to the IRS, you are not off the hook. The IRS rules state clearly that the absence of a 1099 is not a safe harbor. You are still legally required to track your cost basis, gather your transaction logs, and manually report every single taxable event yourself. Section 4. Mastering Form 8949 codes. Now we get to the actual paperwork. Think of Form 8949 as your highly detailed working paper. This is where every individual digital asset trade gets listed. The IRS has structured a brand new reporting matrix for 2025, and I want to explain exactly how to report these new digital asset transaction codes on your forms. First, you separate your trades by holding period. If you held the asset for 1 year or less, it's a short-term transaction, reported in Part I of Form 8949. More than a year? That's a long-term transaction, reported in Part 2. For short-term digital assets, you use boxes G, H, or I. Check box G if you got a 1099-DA, and the broker reported your cost basis to the IRS. Check box H if you got a 1099-DA, but the basis was not reported to the IRS, and check box I if you didn't receive a 1099-DA at all, like with those self-custody wallets we just talked about. For long-term digital assets, the logic is identical, but you use the letters J, K, and L. J is for basis reported, K is for basis not reported, and L is for when no 1099-DA was issued. You have to separate your trades into these specific categories. If you have trades that fall into box G and box I, you actually have to fill out 2 separate pages of Form 8949 Part I. But wait, what happens when the broker's paperwork doesn't actually match reality? Form 8949 has columns for adjustments. Let's say you receive a Form 1099-DA, and the cost basis the broker reported in box 1G is just wrong. You can't just type in your own corrected number in the basis column. The IRS requires you to enter the incorrect basis exactly as the broker reported it in column E. Then you enter code B in column F to tell the IRS, hey, I'm making a correction, and you put the mathematical adjustment amount in column G so your final gain or loss comes out correctly. Similarly, if you had digital asset transaction costs that aren't reflected on the form, you use code E in column F to adjust your net gain. This ensures your tax return perfectly reconciles with the IRS computers while still letting you claim your true cost basis. Section 5. Connecting to Schedule D. We've defined the assets, gathered the documents, and mapped out the individual trades on Form 8949. Now, how does this all flow into your final tax calculation? Here is the life cycle of your crypto tax numbers. It's like a giant puzzle coming together. Step 1. You gather your raw data from Form 1099-DA or your personal wallet logs. Step 2. You enter the detailed trade-by-trade breakdown on Form 8949, carefully using the new G through L codes and any adjustment codes like B or E. Step 3. You take the final net totals from the bottom of your Form 8949 and carry them over to Schedule D. Think of Schedule D as the summary headline. It adds up all your short-term gains, all your long-term gains, and applies any capital loss carryforwards you might have from previous years. And remember, capital losses can offset your gains dollar for dollar, and you can deduct up to $3,000 of net capital losses against your ordinary income. Step 4. That final net gain or loss from Schedule D flows directly onto line 7 of your Form 1040. So the crucial point here is that every single step must align perfectly, which leads me to this question. Are your self-custody records clean enough to survive the new 2025 IRS digital asset tracking system? Because with the introduction of Form 1099-DA, the days of flying under the radar are officially over. Now is the time to gather your logs, sort your holding periods, and tackle your 2025 forms with absolute, total confidence. You know exactly what steps to take.